Ipru varaku velandi meet. Enjoy chestunara. Chippy said. How many of you want to earn from share market? Do you think it's easy? Today we'll make it easy. Good more earnings, everyone. I am Maya Sharma, a share market trainer, wealth creator, and a technical analyst with over 16 years of experience. I am excited today to guide you through the basics of share market. Learning about money is so enjoyable, like planning your next cheat meal. Today I'll start with the story of one of my very first student, Ajit. Ajit, starting his career, he just wanted to learn about investing. So I introduced him to a very simple yet powerful strategy, the power of 15. If you invest 15,000 per month for 15 years and you expect a return of 15%, following this plan, he could build his corpus to 1 crore. The journey of Ajit is a testament to the powerful disciplined investing and the impact it can have on your financial future. How many of you think health is wealth and wealth is health of life? Great. I believe too. Good health enables enjoy life, and wealth supports us healthy life by providing access to better health care and a stress-free life. My health took a hit. So I reluctantly enrolled in a gym thanks to my mentor's OKR push. So now, hoping to shift my gains from market gains to muscle. I'm so immersed into share market that the very first day when I visited the gym, I was analyzing everything through the lens of market strategies. And the machines and exercise looks stocks to me. What is stock market? Actually, stock market is a massive gym. It isn't just any gym. It is filled with diverse opportunities where you can help achieve your financial goals. Investing in stocks, it's just like investing in a new health regime where each share is committed to develop a stronger financial goal for you. There are two types of stocks, common stocks and preferred stocks. Common stocks, these are just like everyday meals, and they achieve voting rights and they also receive dividends, but the dividends fluctuate according to the performance of the companies. But preferred stocks, these are just like your premium protein shakes, and they receive dividends, yes, before the common stockholders, and they are in line first if anything goes south. Now, strategies for first-time investors. You all are first-time investors? Yes. Okay. First of all, what we do in our life also, what we do, we start with education, isn't it? Now, what is education? Education is just like walking in the gym, and if you don't know what the machines will do, intimidating, right? So you have to give time to understand the market indices, valuation metrics, and economic indicators. A little knowledge upfront can save you from lot of sore muscles later. Now see, define your goals. If you have defined your goals, you can reach far. Now suppose if you enter the gym and someone asked you, what are you training for? Your answer is, I don't know. You cannot get too far. So, you should always have planned goals. Whether you are saving for retirement, for a home, or for child's education, clear goals always shapes your investments. For example, if you have a monthly salary of 60,000 and you decide that 20% of the salary, that is 12,000 per month, I will be investing for next 20 years for my retirement corpus. So what happens to this 12,000? It, on an average return of 10%, you make a corpus of 91 lakhs. How this sounds to you? 91 lakhs? Any hands? 91 lakhs only at a 10% return in a max year of 20% of yours just salary. So this is the power of compounding in share market. Next strategy which you have to build is start with small. Now if you enter a gym, the very first day, the bench press you won't be doing with 200 grams. Definitely not. So here also your trainer will not suggest you that. So here also you have to start small. If you have allocated 12,000 of your salary, you just start with 5,000 per month investing in stock market and then gradually take up to 12,000. So start small. This is a very modest amount. This will be like you will be building your financial muscle and not risking too much of your capital. Now consider index funds and ETF. These are like your planned meals and workouts. The planned meals and workout don't look overwhelming to you? So these are just like that. And these are strategic funds, structured, and they are built in diversification. These are a great way to invest in broader market segments and without selecting individual stocks. Supposing from your 12,000 which you have allotted for your investments, 4,000 per month, if you invest for 20 years at a 10% return, you make a corpus of 61 lakhs. If you just invest in these funds, and you don't have to monitor them. These are so easily accessible and they build a corpus. The main thing is your long-term investments. Next, you need to do a little bit of research and analyze. Now, you won't be following any random workout plan in gym, will you? Blindly follow any workout random? No. So, you need to have this caution in your investing also. You need to study the growth potential, market position, and financial health of the company, which will be giving a very stable returns and a very well-researched blue chip company. So the risk tolerance will be less and your financial goals will achieve very fast if you just research and analyze just 2,000 per month in this blue chip stocks from the 12,000 you have allotted for your investments. And you can make a corpus of 30 lakhs. We have taken these all returns on a 10%, though our market moves to 20 to 25% also. So that will be the cherry on the top. So you start and research and analyze. Next, do you remember your trainer at times told you that you cannot skip the leg day? Why did he do so? Because diversification builds stable returns. You should not focus on one sector or one stock. Your investment should be very much diversified to balance the risk, because diversification is financial equivalent. As working out on muscle group will be strength in variety. Be informed and patient, as overnight results you won't be receiving. In this diversified portfolio also, if you allot 12,000 per month, you can invest 6,000 in mutual funds, 4,000 in index funds, and 2,000 in stocks, which will make a corpus of 1 crore. You all can calculate in the calculator too. You'll receive this. You have to be informed and patient, as you don't make overnight health regime, you cannot make overnight money too. You have to be patient and you have to go with the fluctuations of market, up and down in market, but market always goes down but has a potential to go up. They tend to grow. You should take a professional help. If you are not sure about your investments, you should take a professional help. As you are not investment about your health, then you definitely consult a trainer. Same goes here. You should take financial advisor, because the financial advisor will give you personalized guidance and build a diversified portfolio for you, and which will definitely achieve your financial goals. Now the most important is what? Our mindset. Everything is in the mind. The way you train your mind, everything you can achieve in this world. So, mindset. Positive mindset is required even in health and in your investments. And you should always have a long-term vision. Consistency, patience, and discipline are not the cornerstones for a healthy regime, but they are the pillars for investing too. As I wrap up, I want to confess, navigating up and down in markets, I have mastered over it, but when it comes to my health, I'm still work in progress. And I have conquered the financial markets, but when it comes to the treadmill, I'm still to conquer it. So you should focus on long term, because main is focusing on long term, staying consistent, and all of us succeeding in health and wealth. Thank you.